What is a secured credit card? Everything you need to know. In this day and age, credit is a critical component to everyday life, and good credit is everything. Still, we all make mistakes. About 1 million people have bad credit, and more than 1.5 million people file for bankruptcy every year. When you have a low credit score, it can be difficult to impossible to get a loan for anything. A credit card, a personal loan, a car, and don't even think about trying to buy a house. Even if you get someone to finance a mortgage for you, the interest rate will be so high your payment will likely be insurmountable. How do you change all that? If you've paid off your debts or made arrangements with your creditors to stay out of collections, or you've just filed for bankruptcy, or you are just starting out in the world of credit, a secured credit card can be a great place to start getting those scores up. What is a secured credit card then? Let's talk about it. But before we get into it, don't forget to hit that like button on your screen, subscribe to the channel, and turn on your notifications so you won't miss a show. Secured credit card. A secured credit card is a credit card issued by a lender funded by a deposit you make with said lender. Basically, you give a lending company or bank money, and they give you a credit card for that same amount of money. The money you give them is held as collateral for your credit card so that, in the event you default on the card, they can pay it off with your deposit. Who issues secured credit cards? Most banks and credit card companies offer secured credit cards. If you already have a bank, you can apply for a secured credit card there. That way, you're not only building credit on your report, but you're also building a relationship with your bank. Your relationship with your bank can affect whether you get an unsecured credit card in the future, a car loan, and yes, even a mortgage. It helps to have an established history and set of accounts at the same place where they know you by name. Improve your credit score. The biggest benefit to having a secured credit card is that it can improve your credit score. Your job is to use the card responsibly, make at least the minimum payment on time each month, and your lender will report that information to the credit reporting agencies. For those not aware, the credit scoring ranges from 300 to 850. Bad credit, 300 to 629. Fair credit, 630 to 689. Good credit, 690 to 719. Excellent credit, 720 to 850. You are aiming for, at the very least, good credit. Every time you make a payment on time, your credit improves. Over time, those on-time payments add up, and your credit score will gradually climb. Another critical component of improving your credit score with a secured credit card is to keep your balance well below your limit. You don't want to be maxed out every month. It typically takes between 3 and 6 months to establish good credit. Unsecured credit cards. In most cases, your lender will switch your secured credit card to an unsecured credit card after a period of time, during which you have exhibited credit worthiness. You have proven that you are a responsible borrower, you made your payments on time, and you kept your balance low. They will want to lend you money on an unsecured credit card. When that happens, you'll get your deposit back from your secured credit card, and you can begin your journey into the world of unsecured credit. Cons of a secured credit card. Sounds great, right? So what's the downside? Well, a secured credit card is an expensive way to build credit. You usually have to come up with a minimum of $500, and the interest rates can be well above 20%. Be sure if you decide you want to go this route that you shop around. Of course, check with your bank first, and then see what else is out there. Most of the big companies, Bank of America, Wells Fargo, Chase, Discover, and so on, will offer a secured credit card. Check the interest rates. Look into any hidden fees, like initiation fees and annual fees. On top of a deposit, those fees can really add up. Take care to find yourself the best deal possible. In the end, it is going to be tough to build credit no matter what. Even if you were to get an unsecured card with bad or no credit, you might end up with a really high interest rate. You're better off getting a secured card for a lower interest rate. To sum up, a secured credit card is a credit card issued to you by a lender, backed by money you give them in the form of a deposit. It can help you build credit if you use it responsibly, ultimately leading to you qualifying for an unsecured card. You may pay high rates at first, but as you build good credit, you will then get your deposit back, and your interest rates will go down. Now, don't forget to hit that like button on your screen, subscribe to the channel, and turn on notifications so you don't miss our next show.